Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 92.5 to 93.5 as short-term resistance. ES ended up testing that area and then failing and resulting in a move all the way down to 79.25. At this point, heading into the open, we're going to be using 82 to 84 as the micro bull bear zone to establish our short-term directional bias. As long as ES can hold 82 to 84, we can still get a move up to the 91 to 93 pre-market resistance and the 95.5 to 97.5 initial resistance zone. The market right now is running on above average volume, which typically results in a wider range, or at least in more intraday volatility, even when you don't get a really wide range on the day time frame. So we should see some pretty decent movement off of the zones this morning. So in the event that ES holds 82.84, we'll look for a move up to 91.93, 95.5 to 97.5, and potentially even the prior VPOC at 98.50. In the event of a failure at 82 to 84, the market can go down and test 74 to 76, which is a short-term inflection point, and the expectation is for responsive buyers to be active there. Off of 74 to 76, ideally you want to see the market trading back above the overnight low and back into the 82 to 84 area. If off of 74 to 76, the market is actually not able to get back above 79.25, that would be a bearish indication, and then we could even see a move down into the next zone at 65 to 68, where again responsive buyers can be active because the bigger picture bias on the larger time frames is still bullish. This picture that we're seeing right now is essentially short term. The market's trading and testing a short-term inflection point, but on the larger time frames, the buyers would still be in control, and that's why we can still expect reactions off of pretty much every support zone as the market goes lower. And by default, if ES is holding 82 to 84, then we know that even in the short term, the buyers are actually gaining control, and because the larger time frame is bullish anyway, then we can get a move up towards 91 to 93. Looking at the other markets, the Russell is still maintaining its relative strength and looking pretty decent. NQ is looking okay as well, and also at a short-term inflection point. So if you're watching NQ, we'll just be seeing whether it's holding roughly the 4400 area, and if it is, then we know that we can still get some upward movement. And that's really been the story here with this market, is that every pullback has been bought and the buy side has been in pretty firm control. And so if we hold here at 82 to 84, we can still get a move up to 95.5 to 97.5, 91.93 being the short-term inflection point and near-term target. At the same time, keep in mind that there can still be opportunities on both sides. It's just that above the micro bull bear, the long side is going to have a little bit more edge, and below the micro bull bear, on the larger time frames, the longs can still step in, but short term, we'll know that the market is actually indicating weakness, and we'll just have to make sure that we get decent location on any long setups we take, and at the same time that we don't overstay on the short side. So that's something we'll have to gauge once the market opens, depending on just the magnitude of the weakness or strength that we see in the market. But right now, the markets are running on above average volume, which typically results in some pretty decent opportunities and decent range potential on the day time frame. So whichever way the market starts going, there's definitely some range potential on the day available here. So those are really the main ideas heading into the open. Let's see how the market reacts to 82 to 84, whether it's able to maintain itself above 82 to 84. If it is, then we're going to focus more on the long side. If it fails, then we can even identify a short-term short setup down into 74 to 76, and then depending on the reaction at 74 to 76, we'll gauge whether the market can reverse from there or balance and then actually go down to 65 to 68. But just keep in mind that the larger time frames are still bullish, and the buyers can step in at pretty much every zone along the way. So those are the main ideas heading into the open. Let's see how the market reacts to 82, 84, and take it from there.